Robschild, no investment advice. Welcome to the show where we view financial markets using Ben Graham's investment philosophy, macro, technicals, and crystal ball gazing in that order. Today is Friday, January 10th, 2025. I did a new macro show as a separate show for this week, so look out for that. Today's episode begins with 256,000 jobs added and the unemployment rate dropping down to 4.1%. What I find interesting about this is that we added so many more jobs than expected, and yet unemployment is not dropping a lot. I mean, it was 4.2% last month, and now it's 4.1%, suggesting that, to me, there's more people searching for jobs that are continuing to not be able to get them. And then interestingly, we had no major changes in the Fed funds futures, simply higher chance of no cut until June still, but we still had the highest probability of no cut being not until June anyway, so not really an update there. Last item of the agenda, I sold my socks today, still buying TMF. Socks is a short version of SMH. I was very confident previously that this would be a Head and Shoulders top, but the fact that his arm just keeps getting longer and longer here, it's like I've already made it a lot of money shorting this, and I got out at a very nice, handsome reward. Made plenty of money on this already, so I'm out, because the longer that this goes sideways, the lower the probability it becomes that we're going to drop to the downside. And if we zoom way out, we can see this consolidation here may not necessarily turn into this little Mr. Market guy that I drew with a head and top shoulders. Too many times I have seen Head and Shoulders not play out because I wasn't patient enough. The truth is, with these patterns, is for it to properly play out, you need it to actually break the neckline, and then you short it, and that's how you get the move to the lower spot. You don't short it just hoping that it's going to play out that way. But I mean, granted though, with all of these giant engulfing red candles, the red candles being larger and more formidable, it says that the bears are still the bears are selling strongly here still. So, but again, with this arm extending so long and with bond yields going so high, it's just there's a better opportunity to make money in going long bonds. Plus, it's always easier to make money going long something that you see is undervalued than trying to guess how dumb Mr. Market's gonna get. Daily reminders, look out for my new show, Macro Update 11025. There will be dominoes in the ball. I'll add that in there. There is one thing that I haven't changed. I just left sitting there for a while. For a while we were at 4% yields in treasuries, and now the long end of the curve is just we're sitting at 5% now, not 4% anymore. Just adding to the attractiveness of bonds, all while the S&P 500 is stubbornly still staying here with extremely high valuations. This big mismatch here is going to end well in my favor, in my strong estimation. Again, watch the macro show to hear me walk through all of that. Same with the crystal ball readings. No major updates except that I sold my socks. I have it mostly as cash, and I'm just buying more and more TMF. The higher yields go, the more attractive this market's becoming to me, and that's it. All right, so starting with the S&P 500, we were kind of curious about if we would break this former trend line here, and we did, so we can delete it. Goodbye, trend line. Depending on how you draw this line, some people use a flat line here. A lot of people out there, but by the way that I drew it, we actually closed right on this line, but people that are much better at chart patterns than me are ringing the alarm bell now, saying no, this neck has been broken. We're headed down to the 5600 level with good probability now. So, uh, believe them over me. You know what? I'm just not even going to deal with this line. I'm just going to delete it. Looks bearish. Everybody's saying it's bearish. It looks like S&P 500 may lose some significant value from here. One other thing to add about the jobs number, and I've said this on a show or two before, how it's interesting how sometimes we can get to the point where no news is good news. I mean, from this, what would be good news, really, coming from this employment report? I mean, isn't people getting lots of jobs? Isn't that good news? Well, no, it's not good news because now there's less of a chance of another Fed cut, less candy coming in. So then the market sells off like crazy. Well, let's say it went the other way. Let's say unemployment jumped and the employment report was like really low. Wouldn't that also be bad news because everyone's losing their jobs and no one can get a job? I mean, at this point, sometimes they say good news is bad news is good news. And then sometimes good news is good news is bad news. And then sometimes good news is bad news and bad news is bad news. It's all bad news. I mean, when stocks are valued like this, all while bonds are, somehow selling off, yeah, everything's bad news. And while some people are saying, oh, inflation, the dollar continues to rip higher. New, not all-time high, but when was the last time we were this high? In 2022. The dollar just surging to the upside. You can hate the dollar all you want, but it's going up in value. Notably, the VIX is also going up. It looks like it'll probably keep going up, especially if the S&P 500 continues to fall, which, me and my crystal ball, we see it all. We think it's going to keep going down. TLT, my favorite place to be on an adjusted for dividends basis. We're sort of sitting at this recent low. If we get rid of the adjusted for dividends, though, we're approaching the all-time lows of this fund. I mean, this is since like the 80s. Like, bonds are cheap. There's no other way to put it. Can they get cheaper? I don't think so, and neither can anybody else, but strange things happen. So we'll see. I mean, I'm loading up on this stuff. I'm adding leverage at this point as we go lower. I was interested to see if the 10-year Treasury note yield would top out at this previous top of April 2024. We broke through it today. So yeah, maybe the 10-year is headed to 5%. Notably, the 20-year and 30-year are kind of just like sitting at 5%. I think that's a psychological level for me too. If a 5% guaranteed return, well, demographics and, it's like, okay, why are bonds selling off? Well, yeah, there is a little bit of like, what is, the next political administration going to do? It's sort of a test. This is like the market testing, the bond market sort of testing the new administration. Like, are you going to let yields go up forever? I mean, it's amazing, wonderful, crazy times in markets right now. Similarly, a parallel, same with TLT rather, on an unadjusted basis. We're getting into that range on the 30-year Treasury bond. This area here. I didn't think we would get back up here, and yet here we are. And so this is, for me, it's just a wonderful time to be able to get into Treasury bonds. That's the only way I look at it. The other charts that caught my eye today was oil. Some professionals, I think they have this line connecting. Where does it connect from? From like the top to the top. Point is 78 dollars was the range that a lot of people were looking at to short at, and we, for all practical purposes, we basically hit that today. I know Gareth Soloway on his show in Verified Investing started a short around 74 because he wasn't sure if it was going to get above it, and then he got even more short when we got to 78. He doesn't think oil's going to get higher from here. And again, scrolling out to the 2021, just hitting this trend line 1, 2, 3, 4, and then just boom, 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 boom. Like this it's just screaming that it wants to break down. That's what it looks like to me. And then wood, pretty big engulfing candle to the downside. Another decent leading indicator. Price of wood is involved, largely with expectations of home builders, basically. And then gold, interestingly, getting a bid here. I don't like gold because of how far it's above its moving averages. It just seems it's not cheap. So why buy it? I mean, people make lots of money in momentum. Maybe someday I'll switch to becoming a momentum trader, but at my, I'm really a value guy, and so I'm looking for stuff that nobody else wants, and then sell it when everybody wants it. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time at Robschild.